Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Verdon in London, and these are the stories that set your agenda. Chinese stocks are mixed as investors digest manufacturing data, raising hopes that stimulus measures are working. The yen strengthens as the BOJ keeps its benchmark rate unchanged. A bumper day for European bank earnings. We'll bring you results from BNP Paribas, BBVA, and we'll be speaking to the CFO of the Dutch lender ING. Plus, big tech disappointment. Instagram owner Meta falls as it warns investors about heavy spending on AI and infrastructure. Microsoft slides on a slower forecast for cloud growth. A very good morning. Welcome to the programme. We're going to kick off the programme with some breaking earnings out of Paris. We have BNP Paribas third quarter results just across the terminal. Net income, €2.87 billion. The estimate was for €2.89 billion, so pretty much in line with estimates there. The backdrop, of course, the political uncertainty, ECB rate cuts as well. And we're going to be speaking to the CFO of BNP Paribas in an hour's time on the opening trade. So interesting to digest the backdrop politically and economically, also in the context of the SocGen earnings this morning. We had broadly beating expectations, so now looking ahead to Crédit Agricole as well for that triumvirate of French banks. But we can also now turn to Spain because we've already had the BBVA earnings this morning. Net income coming in for the third quarter at €2.63 billion. The estimate had been for €2.39 billion. So a beat there. BBVA, of course, in this takeover battle for Sabadell. It's been ongoing since April. It is hostile. Sabadell trying to fend this off, and they've reported results this morning as well. Sabadell beating on profit as it tries to avoid this takeover, but BBVA shares up 10% so far this year, the worst performing Spanish bank. So we'll keep an eye on both of those at the open, and we'll bring you an exclusive interview with the CFO of BBVA as well as the chief executive of Sabadell, both on the opening trade in just over an hour's time as that tie-up between the two Spanish lenders comes under scrutiny. Turning to some other earnings this morning, we have out of Paris, ST Micro Tech, the worst performing sector on the Stock 600 yesterday. Looking into these results from ST Micro, they are seeing full year net revenue at $13.27 billion, and they had seen $13.2 billion to $13.7. So pretty much in line there. Full year gross margin slightly below prior guidance is what they say looking ahead. These shares down 43% year to date. So will we see a further knock to the stock at the market open? Let's check in on these broader markets now. We did have those earnings out of the US tech giants last night, now weighing on the futures picture when it comes to Wall Street. So S&P E-minis down 0.5% currently. Nasdaq futures 0.7 lower. And you're seeing the misery looking to transfer across the pond into the European session as well. Euro Stoxx 50 futures down nearly 0.5% this morning. Flipping the board over to the cross-asset picture, we've had a lot of news out this morning already, not least from the Bank of Japan, holding interest rates steady given the uncertain outlook politically in Japan, internationally with the US election on the horizon, and therefore economically globally as well. You've got the yen currently at a 152 handle, the US 10-year yield at 4.27%. We have had traders slightly trimming their bets on Fed cuts after the latest US eco data, and we're going to dive into that for you later in the programme. The pound at $1.29 off the back of Rachel Reeves's first budget out of the UK yesterday, Labour's first in over 14 years. We'll also digest what that means for the UK economy. And you've got Brent at $72 a barrel, stronger 0.6% as markets digest the latest developments in the Middle East. But let's cross over to Avril Hong now. She's on standby for us in Singapore with the latest in Asian markets off the back of that BOJ decision. And Avril, some interesting data out of China as well. What are you watching?
Yeah, Lizzie, we're seeing Asia stocks mostly lower. Some of this in Japan is a function of the earnings-related news, but investors are trying to digest what's next for the Bank of Japan, as you know, the expectations coming into today was really low that it was going to move next to nothing, in fact, given the US and Japan related, election-related uncertainties. So that makes Ueda-san's presser all the more important, given that backdrop, especially given how you see some expectation of how strong the Japanese economy looks. The next move is likely to be a hike, and it's really, I think, a matter of the timing. The yen has been extending gains since the decision came out. Now, let's also, as you say, highlight what we saw in the Chinese data, because there was an expansion. This was unexpected on factory activity, but in terms of stocks, it's looking pretty flat. Let's take a closer look at what we're seeing on dollar-yen implied volatility 1 week. A reminder as well that it's not just about the BOJ, it's also about the US events next week and US jobs data this week, relatively high at 17%. Lizzie.
All right, Avril Hong, we thank you for that update on Asia markets. I also want to bring you some more breaking earnings. We have AB InBev third quarter results coming out of Paris. Those shares currently down 1.7% so far year to date, and we are learning that organic volume growth came in at minus 2.4%. The estimate was for minus 0.07%. So this is much worse than expectations there out of the drinks maker. Another one to keep an eye on at the open. But let's go from the micro to the macro and over to the BOJ, which, as Avril says, kept its benchmark rate unchanged this morning, given the uncertainty over the economic outlook and the ruling coalition's worst electoral result since 2009. Taro Kimura from Bloomberg Economics joins us now with analysis from Tokyo. Good morning, Taro. This hold widely expected, but did we learn anything about what's next for the future path for rates when it comes to the BOJ?
Hi, good morning. I think actually the time is not good for a BOJ to make a policy move, or even I don't think Governor Ueda will have very limited room to send a fresh signal in his press conference happening in 20 minutes or something. Anyway, so the rate hold itself was mostly widely expected. However, we can learn something from its new quarterly outlook report, in which the BOJ Policy Board maintained its inflation forecast around 2% in the forecast horizon until fiscal year 2026. And also they kept a main policy sentence that says if those forecasts are going to materialize, they will keep rising rates. So therefore, they're in a pausing mode for some uncertainty surrounding U.S. politics, U.S. soft landing, and Japan politics, but their stance for seeking for timing to hike rates is maintained. And my expectation for the next time for the BOJ to move is January, when they have more clarity on U.S. economy, the market, as well as the developments in wage negotiation happening in next year spring.
OK, really interesting. So we'll have to wait for January for that. But what's going to be the focus for yen watchers at this press conference with Governor Ueda? Beyond inflation, what's going to be the key factors to monitor in the coming months?
It's really important to hear what the Ueda will say about his assessment of the U.S. economy, which recent data prints suggest slightly a positive reading, as well as how he takes on recent renewed yen selling pressure, which will also add pressure to Japan's inflation and tip BOJ to hike rates in the near future. And also, I don't think Ueda will steer clear about that, but absolutely Japan's political situation is very important. I don't think usually that the political situation doesn't get in the way of Bank of Japan's policy decisions, but the results of the Sunday's elections, which elevated Japan's political situation, uncertainty in a historically high level. So therefore, even for independent BOJ, it's really hard to move. So therefore, the Bank of Japan wants to see more clarity in how those political balance will settle into a new minor ruling coalition and the collaboration with opposition parties.
Okay, the politics holding the BOJ back from getting on with its hiking. Taro Kimura from Bloomberg Economics, we thank you for that analysis as we continue to watch the yen as we get towards this press conference. It's stronger now, 0.4% at 152 per dollar. But let's get back to Europe now. German inflation ticking up more sharply than expected to 2.4%, exceeding the ECB's target. We're going to get CPI numbers for the wider euro area later today as well, crucial to that ECB rate path. Let's get a preview now from Bloomberg's Valerie Teitel. Val, what are you watching?
Good morning, Lizzie. Yes, that German inflation number really grabbed the market's attention yesterday. The survey estimate was for 2.1%. It came in at 2.4%, so very much above expectations. And it really sets the groundwork for perhaps a hot Eurozone inflation print later this morning. The estimate for the headline number is at 1.9%. Euro area core is at 2.6%, Lizzie. And this one is an important one because of Lagarde's emphasis on domestic-driven service inflation. Any upside surprise in the core number could lead the market to expect that we do not get this jumbo cut from the ECB come December. If you flip over to my next chart, I want to show you just how much the front end pricing for that jumbo cut has really been pared back recently. We're now only pricing 26 basis points for January and 31 basis points for December. So it's really pared back. We were almost pricing in a jumbo cut within the next two meetings. Now we're basically just implying that we have two normal size 25 basis point cuts for the ECB. But it was a bruising day for the bond market yesterday. Let's flip the board. And I just want to show you the big move we saw in the German front end. Those 2-year yields on Germany were up nearly 12 basis points. And Lizzie, you put that in combination with 2-year gilts also rising in yield and 2-year treasuries also rising in yield. There was a big reevaluation of the path forward for global central banks.
Okay, Bloomberg's Valerie Teitel, we thank you as we look at euro dollar at a 108 handle. Pretty steady this morning, it has to be said, but that's the outlook for the ECB. Now, as I mentioned, we have the latest tech earnings actually weighing on US futures this morning. They've shed more light on the kind of divergent themes in the chip sector, really. Samsung's numbers and others from semiconductor names in Japan really indicate demand for AI chips is still strong, but legacy uses are struggling. We've also had the results from Microsoft and Meta giving us insight into the outlook, and we can dive into it all with our tech reporter, Annabelle Drulers, who joins us now from Hong Kong. Annabelle, what stands out for you?
Well, as you said, it's really that divergent theme that we're seeing between AI chips, they're still doing well, and legacy chips on the other hand, and the weakness in that area. So just looking at some of those names you just highlighted there, you had Samsung, Advantes, Renesas as well. The story of AI chips in particular, so that was the story for Samsung was around HBM, and when their earnings dropped, we saw the chip operating division, the profit for that really undershooting expectations, operating profit. But when the company came out a bit later and said that actually it was looking and making progress on its HBM product, we started to see that share price rising. So again, that's that AI versus legacy theme. Taking a look at Advantes, for instance, you can see they're jumping. That's a company that produces tools that are used to test AI chips or chips broadly, but they're tools for AI ones. They also sold well, and so we saw that stock rising to a record high. We have seen it at a record high. Renesas, meanwhile, that stock is slumping there, and that produces chips that are used for automotives. And again, we haven't seen very strong demand there. The forecast from the company wasn't great. So it's just another signal, because we've seen that really across the earnings, even starting all the way back a couple of weeks ago with ASML.
All right, Annabelle Drulers. I just want to also ask you, though, if we move along the supply chain, you've talked to us about the chips, but what about the services end? What about how demand for AI services is holding up?
Yeah, well, this is also a really good week for big tech when it comes to the cloud computing piece, because we've got earnings that are dropping from Alphabet, from Microsoft, and also from Amazon. And they're the three biggest suppliers of this. Microsoft was just the latest overnight, and we saw it actually putting out a forecast for its cloud computing business that was slightly weaker than what had been expected. It's not a demand story, that is certainly there. It's more the supply side, and the company just hasn't been able to build out quickly enough. The concern, though, as it races to sort of catch up to that, is that it could end up putting a little bit of pressure on its margins. So again, we saw that stock lower. It has been a company that's heavily invested in open OpenAI, and again, we haven't really seen the ROI on that just yet either. Meta, of course, as well, another one to watch, and we saw that stock a little bit weaker in after-hours trade, given, again, the company said it's going to continue investing heavily into AI infrastructure, but it could take some time to see the payoff as well.
OK, both Microsoft and Meta down more than 3% in after hours. Annabelle Drewlers, we thank you for taking us through all of those tech earnings. Now, we are going to have even more of them today, but before that, we'll get the Euro area CPI numbers at 10 a.m. London time, as Valerie was previewing. At 12:30 p.m. London time, it's the US PCE data, of course, crucial to the Fed's rate path. And then it's Apple and Amazon's earnings after market, so feeding into this picture for big tech. Coming up on this programme, we'll bring you more of those European bank results coming through. ING boosting its total income forecast for the full year ahead of estimates. And we'll be speaking to the Dutch lender's CFO. That conversation next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. It's 6:17 a.m. in London, and we've got a raft of bank earnings to bring you this morning, including from ING. It's raised its total income forecast for the full year to more than 22 billion euros, ahead of estimates. The Dutch lender also announcing a 2.5 billion euro share buyback, and I'm pleased to say I'm joined now by the CFO of ING, Tanate Phutrakul. Tanate, great to have you with me. Let's just talk through your view of how the third quarter has gone for ING, raising your outlook for 2024 total income.
Thank you very much, Lizzie. I think I would characterize the quarter as being very strong. Right, we printed a good set of numbers this quarter. Customer growth has been strong. I think lending growth has been strong, particularly in mortgages, where we see growth across all of our markets. I think we recorded over €1 billion in fees, which is a record for our franchise over a 3-month period. Risk costs looks pretty solid, about the same as the previous quarter. And as you mentioned, these good set of results has allowed us to do a share buyback, which we announced today with our results, also with an improvement in our outlook for the rest of the year.
Yeah, this €2.5 billion buyback. Has the pace of buybacks peaked, Tanate?
Well, I think we will converge in steps from our current levels to around 12.5%. And I think to contextualize this $2.5 billion, we did announce and completed a $2.5 billion share buyback early in the year. So for this year, we have done over 5 billion or around 5 billion euros in cash distribution to our shareholders. And we continue to believe and are confident we can operate profitably at a lower level of capital than we operate today, given our current franchise and the outlook on risk and macro picture. So that convergence to capital remains our plan.
Well, you mentioned the macro picture. How do you feed into that outlook, the fact that ECB's cutting rates?
Yes, so this is going to be a pretty sharp rotation from 4% to approximately 2%. I think we're confident in terms of operating sustainably, quite a profitable franchise in different rates environment. And I think what I look at as a key is the net interest margin on liability, which is high at the moment at 112. And we expect, even at a lower rates level, we can maintain our net interest margin on liability between 100 and 110 basis points. So we're confident in managing the balance sheet through different rate cycles that we're expected to see in the next 12 months or so.
Well, how do you see lending growth progressing?
Actually, lending is remarkably strong. We already this year to date, have been growing lending at over 4%. We see demand from retail customers on mortgages remaining strong. Wholesale banking is a little bit more volatile. We have a bit of growth this quarter, but the macro picture is somewhat more uncertain, and the impact of high inflation, such long period of high inflation, has some effect on the growth prospect in the wholesale bank.
And what's fee momentum looking like? What's driving fee income?
It's a multifaceted growth. I think fee incomes is daily banking fees are strong. A lot of our customers are opening investment accounts with us, investing in asset management. Insurance fees has also been strong, and in the wholesale bank, we sustain a pretty strong fee growth in terms of capital market fees. So we don't rely on any one particular engine to drive our fee growth. I think everything that I mentioned drives the year-on-year growth of 11% in fees. So it's been across the board, broad aspects in terms of our work in terms of developing multiple fee engines.
I mean, do you rule out M&A to grow that part of the business?
No, not at all. I think what we look at is that organic growth is our go-to strategy. But we're always looking at M&A situation that would accelerate the growth of our franchise, that would lead to, return on equity accretion. So that's what we look out for, and we have looked from time to time, but we just haven't found anything that meets our strict M&A criteria as of yet.
Okay, but not ruling it out. Interesting. Tanate Phutrakul, CFO of ING. Lovely to talk to you off the back of those earnings this morning. We thank you, as always. Coming up here on Bloomberg Daybreak Europe, could the UK budget mean that rates from the Bank of England stay higher for longer? We're going to break down the Labour Party's first budget in more than a decade, so do stay with us. This is Bloomberg.
And their failure to assess the scale of the challenges facing our public services means that this budget raises taxes by £40 billion. Any Chancellor standing here today would have to face this reality. And any responsible Chancellor would take action. That is why today I am restoring stability to our public finances and rebuilding our public services.
So the first Labour budget in over 14 years, the first ever in British history to be delivered by a female Chancellor. And this represents a fundamental growth of the UK state. £40 billion of tax rises announced by Chancellor Rachel Reeves. It's the most since Norman Lamont in 1993. So including tax rises on inheritance, capital gains and employer national insurance contributions. Controversial this, given that Labour had said there would be no tax rises beyond what was promised in its manifesto. And yet, for all of this, the fiscal watchdog predicts that the package is only going to marginally increase growth. Indeed, looking at the statistics from the Office for Budget Responsibility, the fiscal watchdog, it only sees the economy growing marginally, and it sees it smaller by 0.1% than it was forecast to be in March under the Conservative government. And even though this growth is going to be anemic, the package expected to slow the pace at which the Bank of England can cut rates because of the inflationary impact via a higher minimum wage and via this £142 billion increase in borrowing. So if we look at the gilt market reaction yesterday, you can see where Rachel Reeves was speaking on the first line when she sat down, the second yellow line, and then this pretty ferocious sell-off in gilts. The 10-year gilt yield ending the day high of 4 basis points at 4.3% as it digested the repricing of BOE rate cuts. We'll have more on the UK budget later in the programme, but coming up, the latest from the Middle East. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Chinese stocks are mixed as investors digest manufacturing data that raise hope stimulus measures are working. The yen strengthens as the Bank of Japan keeps its benchmark rate unchanged. A bumper day for European bank earnings, asset management and investment banking driving growth at BNP Paribas, the Dutch lender ING also boosting its outlook. Plus, the UK Chancellor promises to rebuild Britain and boost public spending in Labour's first budget in more than a decade. We'll break down all the details for you. Let's check in on these broader markets. You're looking at US futures, especially weighed down given the tech hit after hours. We were discussing that with Annabelle Drulers earlier. S&P E-mini futures down more than 0.5% currently. European futures also pointing lower. We've had lots of bank earnings to factor in already this morning. A €2 billion buyback from ING, not 2.5 billion, 2 billion euros. Also results out of Spain for BBVA and Sabadell. We'll have interviews with them later in programming as well. But if we flip the board over to the cross-asset picture, you're looking at the 10-year US Treasury yield lower 3 basis points at 4.27% currently. Traders having trimmed bets slightly on Fed easing off the back of the latest US economic data. The yen at a 152 handle. As we digest the BOJ decision and await the press conference from Governor Ueda, the pound back at $1.29 off the back of yesterday's UK budget, and Brent trading at $72 a barrel, stronger 0.6% as we digest the latest developments in the Middle East. As I say, ING results came out this morning. We were just speaking to the CFO, Tanate Phutrakul, and we should correct that the share buyback was indeed €2 billion, not 2.5 billion euros. The dividend, €500 million as well. So processing those results from ING as we head towards the market open. Let's stick with European banks now. SocGen third quarter net income beating estimates, and that was really fueled by the French retail recovery. Let's bring in Bloomberg's Caroline Gonin in Paris. Caroline, what are your key takeaways here? It looks like you've also got some changes at the top of SocGen.
That's right. Let me talk to you about the main takeaways of BNP and SocGen. Both had very strong performance in trading. SocGen really surprised positively in the retail bank, even though BNP had sluggish growth for the retail banking. So if you compare trading at BNP and SocGen in the third quarter, BNP, as you know, has always been very strong in fixed income. That unit revenues rose nearly 12% in the third quarter, in line with the performance of Deutsche Bank. For Société Générale, FIC revenues were also up 6%, a bit less than BNP, but better than Barclays, for example. For equities trading now, as you can see on this board, also very strong performance at BNP, more than 13%, SocGen revenues in that unit up 10%. So it seems that BNP on one side in the investment bank is turning a corner, at least that's what analysts are saying. And for SocGen, investors were also looking at the retail bank after some recent disappointments. And clearly in the retail bank at SocGen, also huge recovery there, with revenues up 19% in the third quarter for the French retail bank. Finally, as you were mentioning at SocGen, we had some management reshuffle with the deputy CEO and the CFO both stepping down. There will be a new CFO at SocGen from January, Léopold Alvear. He comes from Sabadell.
OK, so BNP, as you mentioned, continuing to be plagued by these headwinds, but getting a boost from trading. How do you see the longer-term outlook then, Caroline, as we digest these results from BNP, SocGen, and look ahead to Crédit Agricole as well?
Obviously, there's still lots of potential headwinds in France because you remember the snap elections, you remember the 2-month search for a prime minister. Of course, Michel Barnier has no majority in parliament, so we could still see some volatility in France. Then, of course, you have the headwinds that other banks have too, with lower interest rates going into 2025 and the possibility of escalating conflict in the Middle East, especially. It will be interesting also to ask the CFO of BNP Paribas, Lars Machenil, in the next hour about the integration of AXA IM. You know, in the last quarter, BNP has bought AXA IM for 5 billion euros. The plan is to integrate AXA IM in the middle of next year, but even before this integration, they already saw money inflows in their current asset management unit, up nearly 8% money inflows in the third quarter, so quite strong money inflows for BNP there. As for SocGen, you know, there was a lack of trust with the new CEO, Slawomir Krupa, who took over at SocGen a year and a half ago. Perhaps with this good set of earnings and the strong performance, especially of the retail and the investment bank, there could be new investor confidence in SocGen.
Okay, Caroline Cornan out of Paris, we thank you for taking us through those bank earnings out of Paris. And we will be speaking, as you mentioned, with the CFO of BNP Paribas in just about half an hour's time. So plenty to ask on the macro outlook, given, as Valerie was talking about, the changes to the ECB pricing as well. We'll also have exclusive interviews with the CFO of BBVA and the Chief Executive of Sabadell on the opening trade. That hostile takeover very much in focus, a potential tie-up between the two Spanish lenders coming under scrutiny. So great to have both of those within an hour's time of each other on the opening trade. Do stay with us for that conversation. But Caroline was talking about the impact of the geopolitics in the Middle East, potentially impacting these European banks. Let's dive into that next. Israel considering a proposed ceasefire with Lebanon that would keep Hezbollah fighters away from the border. Prime Minister Benjamin Netanyahu is hosting senior White House mediators today as part of talks on a pause. Let's get more now from Bloomberg's Dan Williams. He joins us from Jerusalem. Morning, Dan. What would a ceasefire plan actually include?
It's hard to judge fully, but there have been a number of media leaks and, at least in part, discussions with Bloomberg and other agencies by some officials involved in this, both in Washington, in Jerusalem, and indeed we're hearing from Lebanon today some new cautious notes of optimism about the prospects of what appears to be a deal to begin with a 60-day suspension of hostilities between Israel and Hezbollah in Lebanon. During that period, there would be a withdrawal of Israeli forces to the border between the countries. There would be an enforcement mechanism brought in to ensure that Hezbollah is kept north of the Litani River in the Lebanese interior. And there may actually be a role for the Lebanese military, the Lebanese state, in acting against or at least curbing any military activity or military buildup by Hezbollah, including attempts to bring in weaponry from Iran, for example, and dismantling by the Lebanese army of Hezbollah infrastructure. Now, had we been discussing this a couple months ago, it might have seemed a bit pie in the sky, but Hezbollah's fortunes have changed. It's taken quite a drubbing from Israel over the last 6 weeks, and its relative strength within Lebanon may have waned to the point where Lebanese authorities, foreign powers, UN peacekeepers feel that they have an ability to enforce a UN resolution from 2006 that was never fully enforced, that's really meant to keep that group in check and bring quiet, if not peace, to the Lebanese-Israeli border.
OK, so a lot more hope now for a ceasefire than there was a couple of months ago. But in the meantime, what's the possibility of continued fighting between Israel and Iran?
That's an excellent question. Just last Saturday, we saw this unprecedented series of Israeli airstrikes in Iran. Israel called it a retaliation for the Iranian ballistic missile salvo 3 weeks prior. It would appear that that account is still open. There have been some indications from Iran that it might carry out a strike. In fact, that could even happen before the US election, which presumably would upend what little stability there is in the region, given that Israel says it's ready to go in again with perhaps fuller force into Iran. Now, Iran, quite aside from its domestic interests, from its national prestige, from wanting to reestablish deterrence vis-a-vis Israel, also has interests elsewhere in the region, namely Hamas in the Gaza Strip, Hezbollah in Lebanon, other proxies. It may actually be worried about the prospects of Hezbollah being sidelined in Lebanon, Hamas being defeated in Gaza, and may think that this is an opportunity to open up a full front with Israel to derail those efforts and perhaps keep up its own axis, or at least keep its axis from being driven back too far by these latest developments close to Israel's borders.
OK, Bloomberg's Dan Williams in Jerusalem. We thank you for the update. As we look at Brent trading stronger, 0.6%, just shy of $73 a barrel. Now to some other international news this morning. North Korea has fired an intercontinental ballistic missile after South Korea and the US criticised Pyongyang for sending troops to Russia. Japan says the missile flew for about 86 minutes, which is the longest flight time ever recorded. The US condemned the launch as needlessly raising tensions. Defence Secretary Lloyd Austin says North Korea's decision to send troops to Russia may widen the Ukraine conflict. The Pentagon believes Pyongyang has sent about 10,000 troops to Russia. In other news this morning, Airbus CEO Guillaume Faury says that the company has a difficult end of the year ahead. The world's largest plane maker has been unable to build aircraft fast enough to meet demand. Faury spoke to Bloomberg about the challenges ahead.
We are limited by some bottlenecks in the supply chain, which are primarily the engines on the single-aisle family, the A320 family, but also we have issues with seats, with interiors, and to a limited extent, landing gears. Those problems are being managed. So we have difficulties month after month to execute on the ramp-up. We have a quite difficult end of the year ahead of us, the year-end rally, as we call it, as we anticipate to have more than 200 planes to deliver in the last 2 months of the year to reach the around 770, which is the guidance. So that's the environment we're in. It's a difficult one. We deploy a lot of resources of our own teams to our suppliers to be able to help. But when one of our important partners like CFM, GE, is hit by the hurricane, the Milton hurricane in the US, that has repercussion on our own ability to deliver. So that's where we are.
So where do you expect to see meaningful improvements in the supply chain over the next year? I mean, for instance, could we get a resolution on the engines in the A320?
We know that A320 is relying on two engine makers, two engines, the GTF from Pratt and the LEAP engine from CFM. They have different situations to manage. On the Pratt side, there is an ongoing recall campaign that is leading to a lot of planes of our customers being so-called AOGs on the ground because the engines need to be retrofitted. And that's a vast plan that Pratt is managing. They're on their plan. So we believe next year and the year after, we'll see the number of AOGs going down, and we will progressively be able to have more engines for line fit for the delivery of our own planes. Then when it comes to CFM, we think it's a more short-term crisis that they have to manage. They're very mobilized and focused. It will continue to impact us later this year, beginning of next year, but it should get much better by the second half of 2025 and hopefully much better later. So these are crises of different nature. We're on it. Our suppliers, CFM and Pratt, are also managing those situations, and we think that's something that is temporary.
So that was the Airbus CEO, Guillaume Faury there. And coming up on the programme, we're going to break down the Labour Party's first UK budget in more than 14 years. What does it mean for the economy? What does it mean for the market? That's next. This is Bloomberg. A very good morning. Welcome back to Bloomberg Daybreak Europe. It's 6:46 a.m. in London, and we are digesting yesterday's budget from the UK Chancellor of the Exchequer, Rachel Reeves. A massive package of tax hikes along plans to ramp up public investment in a budget that aimed to revive the UK economy. Was it all worth it? We can discuss now with Alexandra Britton-Davies, a partner at the chartered accountancy firm Saffery. Good morning, Alexandra. You advise high net worth individuals on their UK tax affairs. I wonder whether before the budget your phone was ringing off the hook with worried clients.
Yes, definitely. We've had a lot of quite worried clients. Particularly, there's been a lot of speculation around this budget. We've seen fears that CGT rates would go to 45%, fears that we'd have much bigger changes to inheritance tax, which would really affect them. So in some ways, the budget has been a relief. We now know what the changes are, and we've had announcements on what changes will be in the coming years as well. But then with some of the changes, I think clients will not be relieved and will be wondering what they should do next.
I think one of my colleagues, our opinion columnist Marcus Ashworth, put it well. He said the wallet's lighter, but at least it's got some money left in it. I wonder whether actually, given those changes to capital gains and inheritance tax that you mentioned, we are going to see an exodus of wealth from the UK, as some had warned.
Yes, and I think particularly the change that will lead to people leaving are these changes to the taxation of non-doms. The announcements we had on that very much are the government proceeding with the previous announcements. They've not rowed back on any of those. So individuals we will see leaving, unfortunately. I think there were some positives in there for some individuals, particularly the temporary repatriation facility, which has been made a lot more generous, and that will encourage those who stay to be able to bring their money to the UK, spend it here, invest it here, and that's fantastic. But I think we will see a lot of people leave still because of other changes just affecting them so hugely.
I mean, what about the inheritance tax changes? Do you think that clients have got off lightly there?
In some senses, yes. I think the sort of probably the most widespread change will be pension funds no longer getting that inheritance tax relief. And that's obviously aimed at encouraging people to actually spend those funds, which is the plan for pension funds for a retirement, rather than keep those and hand them over. But the other changes we saw on agricultural property and business property relief will affect some individuals quite heavily, but actually in terms of the general public, maybe not quite so much. The sort of things we didn't see on inheritance tax were changes to how lifetime gifts are taxed. And that was one of the things people were quite concerned about.
What about your clients who are also business owners? We saw this rise in employer national insurance contributions and the rise in the minimum wage. Do you think that those changes mean people will have to lay off staff?
Yeah, I think that's probably in some ways the biggest change we saw. The rate increase from 13.8% to 15% does sound small, but when you have a lot of employees, that makes a big difference. But also bringing down the threshold from £9,100 to £5,000, that's a really big extra cost. £4,100 at 15% on every employee. That's, we're going to see people's wage bills hugely increase. And I think that we will see a knock-on impact potentially in people being laid off, but maybe just people not being hired as quickly in the future.
It was interesting looking at the Office for Budget Responsibility's forecasts that came out, of course, alongside the budget on growth, on inflation. And actually, when it came to growth, it's only marginally higher in the short term and actually lower by 2029 if you compare it to what the Conservatives would have done. If you're talking to your clients about how this is all going to manifest, do you think that Labour's driving away the wealth creators, the business starters?
I think absolutely. I think it being more expensive to employ people, it being more expensive for those wealthy individuals who come here and want to set up businesses and want to work and want to employ people, that's going to have a massive knock-on impact. And I think a lot of the talk around those non-dom changes was, are people leaving? Are people going to stay? But really the real loss is the people who don't come here in the first place. And that has to be the primary focus, in encouraging those people who will invest, who will create wealth and create jobs to move here. I think that hasn't really factored into the changes at all.
OK, Alexandra Britton-Davies from the chartered accountancy firm Saffery. I'm sure your phone's going to be ringing a lot today. We thank you for that analysis of the impact on high net worth individuals of yesterday's UK budget. I also now want to turn to the Bank of Japan. We have had the decision to hold rates as expected this morning out of Governor Widen. He's giving his press conference currently. You're seeing the yen extending gains as we speak, stronger 0.9%, 152 per dollar is where we trade. The stock market, little changed really off the back of the decision, but Governor Widen really avoiding giving hints on the timing of the next hike. He has also announced that the BOJ is trimming its core inflation forecast for 2025, raising its GDP forecast. And we continue to monitor this press conference, a very careful explanation, really, of the BOJ's next move and the context, of course, the political uncertainty in Japan, as well as the impact of the political uncertainty in the US, the election on the horizon, where that leaves the Fed and the feed through to the economy in Japan. But we'll have plenty more on the programme for you, so do stay with us. This is Bloomberg. It's 5:55 a.m. in London. Welcome back to Bloomberg Daybreak Europe. Let's take a look at what we got from UK Chancellor Rachel Reeves yesterday in the first budget ever by a female Chancellor. A lot of it leaked ahead of time, but some of the key takeaways: we had the employer national insurance contributions rise, the rises to inheritance tax and capital gains tax as well. Overall, this was a £40 billion tax hike, an enormous expansion of the UK state. And yet, if you look at the Office for Budget Responsibilities forecast that came out alongside the budget, actually not that big a contribution to growth in the short term. And if you compare it to what the Conservatives would have done by 2029, actually growth falling. And yet you saw as well an impact to inflation, and that is what changed the Bank of England pricing yesterday. Even though growth anemic, you are seeing potentially an inflationary impact from the rise to the minimum wage, as well as this expansion of government borrowing, £142 billion more borrowing from the UK government, and hence you saw the gilt market reaction. If we flip the board over, we can show you where gilt yields started when Rachel Reeves started talking, where they ended when she finished talking, so pretty steady, and then came the digestion of this budget. Look at that move after she sat down and Rishi Sunak responded to that budget. The 10-year gilt yield ending the day high of 4 basis points at 4.3%. So the gilt market reaction pretty ferocious, actually. Not exactly what Rachel Reeves wanted, but not quite a Liz Truss moment either. Next up on Bloomberg, we're going to be bringing you the opening trade. They'll be speaking to the CFO of BNP Paribas after the French lender reported a boost from trading. And in just over 15 minutes, we'll have the CEO of shipping giant Maersk. That does it for Bloomberg Daybreak Europe. The opening trade next.